Bro, we are rude to our customers in the industry. We just want to be about the profit. We just want to be about the bottom line. We just want to be about the reporting at the end of the day to our shareholders. We need to go and meet our customers and talk to them. I mean, hey, guys, what do you want? Let's co-build the product together.
All right, cool. So thank you very much, both of you, for being here today, and welcome everyone to another episode of Tekka Talks. Today we have with us two very special guests. I'm going to try not to butcher the names. We have Matthew Sutika, who is an award-winning entrepreneur and leader in the multifamily and habitational insurance sector, renowned for his innovative approach as the founder of Nimble. With a background as the top-ranked State Farm agent nationwide and the founder of Skylight Insurance, Matthew brings unparalleled expertise and forward-thinking strategies to the industry. He also serves as a consultant and advisor, supporting growth and innovation across multiple insurtech ventures. Thank you so much, Matthew, for joining us today. We also have Temitope Edeyemi, who is the co-founder and CEO of PayU, a pay-per-minute motor insurance startup offering accessible auto coverage for underserved markets. Fascinating. With a strong background in sales and insurtech, Temitope is a 3-time founder dedicated to reshaping motor insurance through innovative solutions. He also emphasizes empathy in business, lovely, believing it essential to building meaningful customer relationships. Thank you so much, Temitope, for coming here today. So I want you guys to tell me something that hasn't been covered in the biography. We like to say the bio is the official story. Tell us the unofficial story. Why don't you go first, Matt?
No, that's spot on. Every time I hear my bio, I'm like, I should probably update that. I should probably add a few things. I should probably adjust. And for me, is if you get to know me, that type of stuff is what I always consider like the corporate stuff. I'm an insurance nerd at heart, born and raised into the space. What I love about insurance is that for the most part, it hasn't been changed in 100 years, if ever, in a lot of things. And so what I kind of pride myself in is always that I'll never say something like, oh, well, that's just the way it's been done, or that's just the way insurance is, or, whatever. And that's been pretty successful in this space. I'm sure it's the same for Temitope, but like, you don't have to come up with that crazy of an idea to be kind of game changing or groundbreaking in the insurance space. And then it's all backed by a lot of money, a lot of recession proof type of business model with insurance. So, I'm now describe myself as like dad and entrepreneur. So got a little family. So I love being able to blend the two of those. And my last part is that I love the technology piece. I can't code. I can't, do much more than Google Sheets, but I really love trying to figure out the ways to use technology or partner with a Temitope who maybe does know how to, do some of the things and, kind of change things as much as you can, or help some of the people in the insurtech space come up. So that's really more my bio, is that I'm just a insurance nerd who loves tech or pretends to love tech, and just trying to grow a little business to feed the family.
Awesome. Thank you, Matt. Temitope?
Yeah, so I mean, when I hear my bio read out to me, I'm kind of like always feeling like I've not done enough as regards what my mission is in the insurance space. Because looking at uh, my background story, how I accidentally uh, joined the insurance industry, and what spurred me into the industry, and my goal basically in the industry, I think I've been in the industry for 18 years, and I've not I've not given to the industry within that 18 years what I need to do, right? But then, of course, every day we keep going, starting with deepening insurance penetration across Africa, very important. Um, like I said, I've been in the insurance industry for 18 years. I've trained across some countries in Africa, as well as New York in the United States. And I think I have that kind of global outlook to solve domain problems across the African continent. So, I mean, that's how I like to feel about myself, and how I like to share what and who I am. Yeah, thank you.
Thank you both so much for being on the show today. Now, it seems to me like today we have two incredibly passionate about insurance people on the show. And it is somewhat unusual, right? So because insurance is at the end of the day a financial product. And usually when you talk to bankers, they don't have this thing about, I'm really passionate about derivatives or about, stocks and, that kind of stuff or loan portfolios. Why, in your opinion, do you think insurance is different? And why is insurance so important? And why is it something that you believe is an industry that we should all support?
Yeah, I can jump in on that. I mean, for me, my passion comes from I grew up in it and I saw what the industry could do for my family. So that's what jump started me on it. Coming out of college, I didn't know what I wanted to do. So the appeal for me of insurance is number one, the recession proof of it and the just long term business model. I always tell people it's the sexiest business that no one thinks is sexy, right? No one, like everyone wants to be a banker, wants to be a realtor, wants to be anything else. 90% of our industry fell into insurance. They couldn't get a job out of college, so they got a cold calling job at a local brokerage, and then now they own a brokerage, or they were the basketball coach and the agent in town retired, so they took it over. You hear a lot more of those stories than someone like you said that's like, hey, I really wanted to be in this space. And even I fell into it a little bit by just like it's what I knew through my dad. But then once I got in, it became like a lifestyle for me, right? Because not only did I know it, but I didn't have to worry about the industry going away while I built my life on the industry, if that makes sense. Like I know that insurance is such a rock that's going to be there. And then I can add innovation to it. I can bring new things to it. I can grow on it, and I'm not worried about like I used to know the guy who built what was it, Redbox, right? And which for those who watching this don't know what Redbox is or have a different version depending on where you're at in the world. It was where, you used to have the DVDs and you could go almost like a McDonald's and, rent the DVD and that was such a great thing at the time. Right. And then it got surpassed real fast by being able to just buy movies on your TV and, some other things like that. So that's what I like about insurance is that you can have a great idea and it's not going to fall apart. There's not going to be something that I think that totally disrupts and replaces insurance. Now technology will make insurance better. And if you're not growing with it or not passionate about it as a company and staying up with it, then you can get passed by, but you're not gonna be Redbox, right? You're not gonna completely be out, or Blockbuster or any of those type of examples where you're just out, you're making millions and then you're just out, you're just done, so that's what I like about it. And then, realistically, for me, there's just naturally a good amount of people that I tend to work with in the insurance that I don't see in a lot of other industries. It is a very family based, I think, as an overall industry. With a lot of people being broker owners, there's a lot of that family type business, and I like that aspect as well.
Yeah, thank you so much. I'm kind of happy to hear that, Matthew. And as you mentioned, this is really true that this industry has been going on for some time now, and as you mentioned, has never been challenged. We hear about the Kodak moment when the digital photography came in. Kodak didn't see it coming. Now they over. Same thing with you mentioned Blockbuster, I think.
Mhm.
And the Netflix came and disturbed the industry, and that's all gone. But I have a bad news for you guys for the engine. And I'm gonna be controversial. I think you're right. It's you guys are sitting on the bedrock, and it's an amazing, beautiful business. Okay, it's profitable. We know that the industry is $12 trillion yearly revenue. Can you imagine that? And I'm talking about revenue. So it's a massive, massive. Of course, not everybody is born into an insurance mindset, and they don't see it as the really exciting jobs and opportunity in that space, as you mentioned. But the reality, in the past 5, 10 years, it's true that the entire ecosystem was building on top of the existing insurance system. So whatever you see as an innovation, you will see better website, a better aggregator, to facilitate the search for your best product. AI now is coming in to actually help optimize the insurance mechanism and to make it even more profitable, in a sense. And I see that the technology actually is building on making the owner of the insurance or the insurance provider even more efficient and more profitable somehow. But the reality, what I see for myself, is that we see more and more people being part of the system, and the small carrier, the small owner of insurance, getting actually less off. So you see a multiplication of processes to get paid. Your claims are getting difficult to get and everything. Not only that, as I was mentioning in one of my previous podcasts, you literally need a lawyer to go over your contract before and after.
Yes.
Which is like becoming insane. So I think we have been, the industry has been doing a great job to innovate, but the reality is that the majority of people, to say the least, are not really happy with what's happening. So, and that I would love to challenge a little bit during the discussion, the fact that, alhamdulillah, thanks to God, the new technology finally is shaping things up. Here about decentralization, smart contract technology, blockchain, and everything. That I believe this industry will be disturbed definitely, and go back to the original vision that when the insurance was born, the Lloyd concept of pooling money and resources together to help one another. So it might not, as I say, it might not disappear. It will exist, but in a different, more mutual or community-based product versus the few controlling the masses, I would say. And I'll deep dive later on. I don't want to. I'll let Timothée maybe add up on that or share it.
Temitope, I can see that PayU services Nigeria, am I right?
Yeah, yeah, yeah.
Why is what you're doing now important for the people of Nigeria?
Okay, so thank you so much for that question. Across Africa, insurance penetration is at some countries lower than 1%, and in some countries they are doing as much as 2%, right? Um, Specifically in Nigeria, insurance penetration is lower than 1%. And we are deciding to tackle that from auto insurance because auto insurance is the most known kind of insurance in the country. Yeah. So when you have a car, you have to renew the basic third party motor insurance. Now, like we know, third party motor insurance takes care of the other road user, doesn't take care of your car. So the comprehensive coverage, which is called collision insurance in places like the US, is not affordable, right? You're expected to pay 5% of the value of your car annually upfront. So you drive a 10,000 US dollars car, for example, you're expected to pay $500 upfront in a year. And you're looking at majority of car owners who earn salaries monthly, right? So you want them to save up money to pay you annual premium. So that is why you have very low uptake, um, as low as 3% for the available cars. So what we've therefore done is we realized that 93% of claims the car owners report actually crystallize while they are driving on the road, right? So in Africa, we're very lucky that we don't have natural disasters like tsunamis, floods, and those magnitude earthquakes, right? So the use case for an African, for a Nigerian, for auto insurance is when they put their car on the road to drive. So if the use case for comprehensive coverage is when I put my car on the road to drive, why can't I then just pay when I drive? So if I want to drive for 1 hour, why can't I just pay for comprehensive coverage, layering on my existing third party while I drive? So what it therefore means is someone who drives a 10,000 US dollars car gets to pay about 5 cents when he drives for 2 hours, right? So that makes a lot of financial sense, and breaking the upfront barrier into comprehensive auto insurance. So that is what we are doing at PayU. Now, Nigeria has 60% of the available cars across Africa, right? So therefore, and out of the available cars, you have just lower than 10% who have comprehensive coverage or any form of insurance. So it therefore just makes a lot of sense. And of course, the reason why people don't have coverage is because they can't afford the upfront payment. So it just makes a lot of sense that they pay as they go. So I want to drive for 1 hour, I'm able to buy comprehensive coverage for my car for 1 hour. I want to drive for 30 minutes. I'm able to pay for 30 minutes and all of that. So that's, and of course, the most of our users are the rideshare drivers. That's the Uber, the Bolt, the InDrive. These are the guys that use our solution the most. So yeah, uh, that's how important what we do. So of course, for the very little amount of money that is paid per minute and per hour and per day, if claim crystallizes, we settle their claim 100%. Yeah.
That's amazing. That's fascinating, actually, and we're going to come right back to that. I think on this call, all of us believe that, and all of us are in this industry because we believe that insurance has the capacity to help people, right? Especially when they are the most down, and this is why we do what we do. However, unfortunately, insurance, the industry, has gotten a really bad name. So I turn your attention to a recent case in Australia where the ASIC, or the Australian Securities and Investment Commission, has sued QBE, which is an insurance group, for essentially misleading their customers. So QBE they send out these flyers to the customers saying, if you renew your insurance, you will get some kind of a discount. And behind the scenes, they use some algorithm of some kind to actually negate the discount. And so ASIC, the regulators, they said, well, you guys, this is very deceptive. And what are you doing? And how are you able to get away with it? How are you pricing your insurance? So I come back to Temitope, which is like, why is insurance today so expensive? What goes into the pricing of it, and what is going on? And what makes it worse is that, insurance rates, especially in the US where you are, Matt, and I think in Florida is even more critical, they're just going up day by day by day. And they're saying, oh, it's inflation, oh, is this on it, oh, is that, but it's going up in a way that is above and beyond what people feel in terms of inflation. So tell me a little bit about what goes into insurance pricing and why is it so expensive?
We'll be right back after the break.
Ready to unlock your financial future? Join the Taka Token airdrop and get rewarded. Sign up on Galaxy, complete missions, and earn points. Points convert to Taka tokens in 2025. Don't miss out. Join the airdrop today.
Why is it so expensive?
I can dive in. I probably have a different thought on this. None of it is research based, but from being in it forever, insurance in general, people used to have some loyalty, and when you have loyalty within insurance, that cut down costs across the board, right? Because the less you're moving a policy term to term, the less money you're spending on underwriters and marketing and all these things like that. But then this little Geico and this lady named Flo here in the United States came in, and it was, 15 minutes saved 10%. right? And so I think a lot of outside of other factors, but one factor for me that like is consumer driven is that the average American wants to shop their home and auto every month, it feels like, right? Like they're just constantly, and there's these tools to do that. And what that creates is one portion of pricing that carriers have to equate for is the expense load for, constantly moving and switching policies and quoting. And then as a brokerage on my level, right, the amount of staff we have to shop policies and everything where, you know, um, so, I'm not going to get into the factors that probably Temito looks at because he's looking at it, from an owner of an actual insurance carrier. I'm always looking at it on the sales broker side. But, I know that we've had to have a lot of conversations internally, especially when we're in the home and auto space of like, do we just bring in business and use service centers because we can't give that white glove service because of the cost anymore, so I think there's a lot that the consumers are doing where they're complaining about the price of insurance going up, but they're actually contributing to it, right? And then a lot of these other carriers are kind of creating this FOMO with their advertisements and their marketing. And I think it's just an interesting take that probably most people wouldn't jump into. They'd jump into natural disasters or inflation or all these other factors that people blame for the insurance. But I think they forget about the person who's complaining about the insurance is actually part of the problem too, right? Like, and how they're acting and going, right? Like, I know it's a huge expense for me, and like I said, I don't see the revenue or the P&Ls of these carriers to see what extra expense they have now compared to before Geico and Flo got involved. But I would assume it's dramatically higher to just equate for where we're really not actually like gaining policies. Like Tim Adobe is like gaining policies, right? Like it's lower penetration. What he's doing is actually like bringing people into the market. The market over in the United States is just it's all the same people. It's just like a paradigm shift. It's like, all right, these 10,000 people were at Geico, they're going to go to State Farm. These 10,000 that were at State Farm are going to go to Geico. So are you really gaining? You're and then you're having this huge expense to do all that work and go. And then as far as discounts, to end is that most carriers are set up where you get length of time discounts. And if the whole world is shopping all the time, they're never getting into those discounts. And again, once the last part of it is, I think carriers were forced to do and offer all these crazy discounts instead of just being able to offer pricing because they had to have these marketing ideas. I relate it to how it is to go to a restaurant in the United States compared to going to one maybe in Europe. Like I go to this restaurant and I know I have this like built-in extra 20% tip cost that I got to add on compared to where I go to a lot of places in Europe where there's no tipping. If the burger's $20, the burger's $20, right? I'm not having to do math that like I'm going to spend 100, but it's really going to be 120 because I have to, equate. And I think that some of that with the discounts that's happening in insurance is that we're just artificially adding in discounts as a marketing ploy. We really want to give $900 a year for auto insurance, but we'll say it's $1,000, but you get a 10% discount for being a good student or whatever. And then you can run into problems like you mentioned in the article where maybe you overpromise on those discounts or they don't come through or the numbers just don't work out. Again, I'm not a genius at that piece. But yeah, that's what I'm seeing from like the sales side, the broker side, the consumer side, just my opinion. It might not be fact-based, but that's just, that's what I'm feeling and seeing.
Yeah, I just want to add up on that. Something that is very interesting is you see when somebody joins a job, okay, and particularly in America, you have like a salary. You enter with a minimum, so you can start with a minimum wage, and then you have an increase based on your experience and your years in the company. The reality when we look at minimum wage in America has been like almost static. You don't see a big jump in the price of the minimum wage. And then when you enter into the workforce, actually when you get hired, you don't see a big jump in your salary. So if you are looking at your salary versus the yearly inflation in America, we're already behind just with the inflation itself. And I'm like, looking at the insurance is hyperinflation in that regard. The way when they come and they bill you, so everything stay the same, meaning your salary, except those things, the inflation and the insurance. My question is, how and noticing that you have only a certain pool of people that you can play with. As you know, they either go here or there, and you cannot extend your customer base basically because it's this the maximum pool that is in existence. How do we become sustainable? That's my question. And how long this can last? My last visit in California, in San Francisco, the whole discussion was about how do I pay for my home insurance? I cannot find, I have to switch. And the price became double, triple, and it's becoming insanely, biggest burden for the people. They are not thinking about putting food on the table. They are thinking about how I'm going to make my payment on the insurance. And it's becoming, I would say, a state inquiry because now this department, I was talking to one guy working for one of the department, they were trying to find alternative solution to the existing private insurance business that are not fulfilling anymore the requirement for those people that are not able to pay anymore because there's so much you can milk. The salaries stay static, everything goes up, including the fast rate of the increase in insurance. So it would be interesting to know in comparison to the inflation how the insurance has been doing. And I would say I don't believe it's not about profit because I think that with all the actual science, risk management, and everything, I don't think the insurance is taking any risk. The business of an insurance at the end of the day is to calculate risk and make sure they stay afloat. So if you can please enlighten me in that direction, guys, I would love to hear your comment on that.
So let me contextualize this a little bit. So in the US, as Matt has pointed out, it's a very saturated market. There are lots of competitors. And the irony of it is that in the insurance industry, when there's competition, the prices don't actually go down, they go up. And this is why it's a conundrum. And then Temitope is coming from a market where, as he said, the saturation, or rather the penetration of insurance is 1 to 2%. That's incredibly low. And over there, there's very little competition. The insurance companies don't go there. And that's probably also why the penetration is low, because it's not profitable, I presume. And so Temitope has found a very remarkable way to keep insurance costs down. And to Murad's point, as we are more and more sophisticated in technology, and as we have more and more insurtech that are using technological means to keep costs down and to lower the cost of doing business for insurance companies, why is it still in saturated markets and competitive markets the prices are going up? And why is it in non-saturated markets, in kind of virgin markets like Nigeria, insurance companies are not flooding the market with lower priced products? So what is going on?
Temitope, I'll let you jump in.
So I like to say the West have beautiful problem, right, within the insurance industry. A problem that out here in Africa we can't relate with, right? Um, so part of what has been our problem largely across Africa had been the copy and paste model of of doing insurance. So we still currently have over the shelf how how home insurance is done in the West, which makes no sense to a Nigerian. We still have how uh, auto insurance is done in the West, which makes no sense to a Nigerian or an African, right? Even the West is beginning to move away from the initial method of auto insurance. Because while I lived in Indiana and New York, uh, I had friends who did pay per mile, wherein a device was stuck on their car and they paid based off on how they drive, right? So, for me, I think rebuilding products that fit into the culture and economy of Africans is what is going to transform the insurance landscape across Nigeria and across Africa. However, I still strongly think that most, so for the United States, for example, uh, most people think their insurance is overpriced. So especially, let's say, for example, around auto insurance, some people feel they are paying too much, right? Why should I pay same kind of premium with um, a careless driver that you're unable to monitor to know that, oh, this guy's got high risk, so we should price him higher. This other guy has got low risk, we should price him lower, right? I mean, in a number of times, I've pitched our solution, paying per minute, uh, to um to people around the United States, and they're like, this is a product they would want to buy. As a matter of fact, I have a friend who is waiting for us until we launch in the US. He will want to buy our solution, right? So the fact remains that insurance is a product nobody wants to buy, but everybody needs, right? So for a solution that nobody wants to buy, but everybody needs, we need to craft this product according to how the customer wants it, not how we sit in the boardroom and formulate this product, formulate these policies. We need so we practitioners. So I've been in the insurance industry for 18 years. Bro, we are rude to our customers in the industry. We just want to be about the profit. We just want to be about the bottom line. We just want to be about the reporting at the end of the day to our shareholders. We need to go and meet our customers and talk to them. I mean, hey, guys, what do you want? Let's co-build the product together. I mean, if you know what Pay You, our solution was when we started 3 years ago, it is nothing like what it is right now because we are co-building with our users. We've got a community of 6,000 vehicle owners that we're co-building the product with. So they give us feedback, we implement, we ship back to them. They give us further feedback. That kind of back and so there's that. So the trust that is lacking in the industry, they already have trust in the product because they have that sense of, oh, we own this product, right? Because we are building it for them. Someone is driving and is paying 5 cents for 2 hours drive, 3 hours drive. It makes a lot of sense to the vehicle owner, right? So I mean, low cost products are just the way to go, where people are essentially able to pay as they go. They pay when they need it, not we shoving products down the throat of insurance users, basically. So yeah, that would be my response to that question. Yeah.
I really love, Timo Topi. Is that correct?
Topi.
Temi Topi. Look, I really like what you just said, and you really, again, is localization. It's all about understanding what the market needs. And as you mentioned, people are sick and tired to just, having product coming out from the boardroom to the consumer. As a matter of fact, what you just mentioned, we talk about America as a developed nation, of course, superpower and everything. But the reality, a lot of the Americans are like compared to global South. For me, they are the level of African level, and in terms of being able to buy stuff, consume stuff, and everything. So I look at America as well as a large population who are in need of such a product that you just mentioned. And then when you say pay as you drive or drive, insure as you drive and everything, it's exactly what is relevant to many American. I'm sure that the type of product that you're launching, I'm sure that if you launch these services, because I see that innovation will be born again in Africa, as I believe, because you guys are leapfrogging technology. So one day you will have the latest technology coming out of Africa because you are adopting so fast. And not only that, even in the consumer way, we will, in the future, I believe in the next 5 to 10 years, we will actually consume product born and raised in Africa, because of the way you manage to be, like I say, too much money in a startup, kill a startup. Not enough money in a startup, make a startup think out of the box and create ideas and generate a better product that will survive and sustain. And that's exactly what's happening in Africa. And I'm glad to hear that.
Yeah. I love it too because I do a lot of podcasts and hear a lot of people talking, and it is kind of refreshing to hear some different approach, different things that you have going on. And it reminds me when I opened a State Farm out of college, and you have to read this book called The Farmer from Myrna, right? Which is like the book about the founder of State Farm. And what it talks about really is that back insurance from the Lloyd's of London's days, how insurance started was just basically there was a problem that someone needed to get cargo across the ocean and you needed to pay for that, right? And this book, Farmer from Myrna, talked about how these farmers, they needed help with their farms, right? And someone needed to provide insurance for that or provide their vehicles. And then now 100 years later, yeah, we have some form of that still, but it's been a long time since someone's really shook it up and went back to the people, right? So I think it's really interesting. I would love to, personally, be part of that wave as you come over to the United States, and any help that I can do, because I really do think it is something that over here immediately you'd be like, oh, this is for people who can't afford that upfront insurance. But I'm not sure someone of myself or my friends or different like that don't want the same thing, right? Like, I don't care if I make $1 or $1 million. I'd like to pay my insurance appropriate to what my actual risk is. And if I drive my Tahoe 5 minutes a day and that's it, and then it sits in the bunker of a garage the other rest of the world, like, yeah, instead of paying $2,000 every 6 months, I'd love to pay 5 cents, right? Or the equivalent over here maybe is $5, right? Or whatever. And if you can get the risk reward that, that's enough money coming in that I'm not worried about, like, if I do actually have an accident, getting my claim paid, and you can make enough money that, at the end of the day, you have to make profits so you can have employees and stuff like that. You don't have to be egregious. I think the concept is it's interesting. It's finally something different, because I've helped some of the Metro Miles and been around some of those pay by, and they took off, but not crazy, because they're not really, they're just, you end up getting into the 2,000 every 6 months, right? You're just doing it through mileage and whatever. It's not really changing the concept of that risk to reward, and, looking at things like, hey, yeah, like, over in the United States, we'd have to worry about hurricanes and some other things like that. So maybe you have to, from the comp side, equate for that a little bit or whatever. But yeah, for the collision, like, you can't get your car in an accident if you're not out on the road. So, if you never get it on the road, why pay for that? So I love that concept, and I think it's super interesting. I can't wait to watch you kind of keep developing that.
I'm glad all of us, all of us wants to buy in to pay you. So I'll say if this was me pitching to a VC firm, I got the 10 million $10 million check, right? So our approach is we like to build solutions for those who want to use it, right? Not with thinking in our head that this is what they should use. No. It's the customer that ought to be telling us as an industry, this is what we want, right? I'm talking about the U.S. market. Of course, Maryland is one state. So as a background, PayU is a Delaware headquartered startup. So Maryland is a city we're looking at coming into, and of course, so if, for example, um, it is 1 cent that is paid per minute in Nigeria, for example, wherein so in the US market, if you get into a car crash, it's usually a replacement that is done. So let's say the headlamp got damaged and the bumper got damaged, so it's going to be a replacement. But across here in Africa, if you've got a damaged bumper, it is a repair, not a replacement. right? So the premium per minute in a market like the United States is going to be a little different from the price. So what I'm just trying to say is actually it's going to just come in for us when and if we get into uh, the US market. But I'm glad that everyone agrees that
Yeah. So
pay is a
since you're
fantastic
glad on
thing.
that, I'm going to add, since we're all aligned, we're all happy, we're talking about new model here. So I'm going to be even more into innovation now. And I want to steer the discussion now. What if now, as we all agree that we work for the consumer and we want the customer to feel better off? And I don't want to go into the debate with State Farm as well. It started as a mutual, now is the largest mutual in the world, maybe, insurance. And all members are supposed to be a member and supposed to be protected by the mutual, okay, the mutual industry. And we heard a few incidents where some of the members were not happy with the claim processing, and the mutual just pay $60 million to shut them off and kick them out of the policy, whatever. So what I want to say now, what if you have a model now? Because we seem to look at Deloitte, okay, but we have to go even further than Deloitte or something like that. Back then, during the time of the travelers in the Arabian Peninsula, people, they used to carry their merchandise on the camelback, okay. And one of the guys decided to say, hey, if one of the camel die, they cannot carry the good anymore, so we have to abandon the goods, okay. So they decided to think about the protection that you could give to anybody losing their goods, okay, and because they were in a journey together, a little bit like the Lloyd. If if the boat was facing problem within the sea itself, they would dump some of the goods that they were carrying, okay, and the participant, the community, would pay whatever has been done. So they come together to subsidize or to help, and that's how insurance was built and insurance was created. So there were no profit seeking, as you can imagine. There were a bunch of guys decided to insure one another. So what if I tell you that in 2024, what time is it? What day is it? On the 14th of November 2024 at 7:44, this solution called the Live DAO, TakaDAO, exists today. So we kind of listened to everybody and realized that we needed to put back the end users in the middle of the play here. So the users or the community come together, they put money together to protect one another. They own the fund. Okay? If there is claim, they pay the claim. If there is no claim, the money goes back to the fund and it's owned by the community. So I want to hear your reaction on that. And what do you think about this concept of insurance? Whomever wants to take the mic, Mike, Mathieu, Temi, I shot your name because it's very difficult for me to say it till after 1 hour of discussion with you. Go ahead.
Yeah, I mean, so tell me, so you have this solution. Can you give me 30 seconds more on what you guys are doing with that solution? And I think I can weigh in a little bit more. I mean,
Yeah.
one
So basically,
more
yeah.
as well.
Yeah. So basically, we come back to the origin of the insurance again. So we decided to say the only way, because the insurance is at odds. I mean, the owner of the insurance versus the end users, they are at odds. You either have to lose in order for them to win. And the motive, the claiming, when you have a claim, it's always a battle. So you have to settle. So the insurance will issue a quotation and tell you take it or leave it, and then you have no recourse. Okay. So as we know, the stakeholders and the insurance owner own the insurance and they are profit seeking. So for them, paying claim is not in the advantage. So that's why you have all this fight, discussion about I hate my insurance and so on and so forth. So now if you remove the profit seeking like we did for Takada, we say, let's create a pool of people putting the money and resources together and ensure, let's say, the engine or the car or whatever, or you can do it in miling, processing, whatever you want. It's your own business how you want to do the risk taking and everything. But we agree on protecting ourselves if something happens. We'll take the money from this fund and we'll pay the reparation claim and so on and so forth. If there is money left after doing all the payment, the money will go back to the participants. So the whole year, the fund can regenerate themselves by keeping, meaning the community on the fund, and they pay the claim together and they take the risk together, and there's no profit seeking in the middle, meaning everything flattened.
Let me add a little bit of color to that. Essentially, we have replaced the insurance company. We have created an insurance or a mutual protection fund that has no external capital, that is run completely on the capital of the community, that has no reinsurance, and as a matter of fact, has no insurance company. And we've replaced the insurance company with technology that runs on a blockchain. So then there is no centralized control over what happens in the insurance fund. It is entirely controlled by the technology, by the algorithms, and the community, who the only people who have the ability to change the risks profile, the underwriting algorithm, etc., is the community itself. And that's what we're trying to create. We're trying to take the profit incentive out of the picture. And we're saying it is a pure mutual, it is back to a pure mutual where the community owns the insurance company and has rights of governance and essentially controls what happens to the fund.
Okay. Yeah, so I mean, it's so we're talking more, it's self-insurance, right? Like, I mean, realistically, right? You're pooling funds together. Me and 10 of my buddies who are going to pool our costs together.
It is exactly self-insurance, but hugely scalable. So instead of saying it's a small group of people who know one another, it's a global insurance from day one, because the technology allows us to do this, and because we use blockchain technology, so we use smart contracts.
I think it's phenomenal. Clearly, I have questions like, did you need a certain amount of like day one buy-in, to create that first fund? So in case there's 3 accidents day one, I would assume, but no, I think it's great. I mean, I think that there is a lot of middlemen. There is a lot of hands in the pot, which increases the price, as we've talked about. And I think there is a lot of factors that, everybody besides the person who actually has their car in an accident is looking at who's going to pay what, and how much they can get from it and they can make. And even Temitobi's mentioning of how over where he's at, they fix things compared to replacing. I think, when you have that self-insured and that shared, you're going to take care of your stuff a little bit more, that you might fix compared to replace if all of a sudden that costs $10 compared to $100. So I think there's a lot of aspects. And again, I only know from this conversation today, but just from off the hip and seeing the industry, I think that there's so many factors that could be beneficial for, the people in here. And then if you have low claims, of course, then you can contribute less the following year because you already have the surplus kind of built up. And, so your premiums could actually go down, right? And not because of a discount or anything like that, just because you pooled together, did a better job at cost saving, did a better job at claims handling, did a better job of just overall, caring, right? I think there's a lot of people, they won't admit it, out on social media, but they kind of, I hear the joke in the United States all the time where they pull into a tight spot or they do something crazy. They're like, I got insurance, almost like, I don't have to be as good of a driver. I don't have to care if I get a door ding. I don't have to care because, I'm insured, right? Almost like they treat it like a maintenance policy. And I think if you're pooled together, you're going to feel more like an owner in this pool. And, you're going to I see it on my side. I do a lot of like large apartment property insurance where we have pooled co-owners. And there is this like kind of everybody looking at the other person like, don't be turning in that $10,000 claim when you could go fix that fence yourself. Your building's burned down. Sure. Like we'll take care of you. But, So yeah, just again, I'm off the hip here. You guys are working on this all day, every day, but I think the concept, if it can be pulled off, is amazing. And again, I came on to speak on this podcast, but it's been really cool and actually interesting to. I almost want to be a viewer of you three, of just like what you have going on, because what I'm finding is that I think we're doing some interesting things over here in the United States, and I think that we run a good business. But you all are providing solutions that are new and game changing, and really, I think, changing the industry. I like to say that I'm changing the industry, but then I hear what you guys are doing, and that's real change. Like, that's real next level stuff. So, my input probably isn't as good as what you guys are already doing, but from just insurance nerd, like I love hearing about this stuff. I love, getting to dive in with you. It's super interesting.
So the bigger the problem in our region, you're safe because you're in America. We have too many problems to fix where you come from that make us think about out of the box to do. But yeah.
Yeah, what's the phrase is like, I'll butcher it, but it's like, necessity creates innovation, or whatever. And I think there's a lot to it. I think that probably, I don't want any more problems, don't give them to me. But like, if we did, I think, you would get me more creative. I know even the stuff at my shop or my business that we've created that I think are really great, did come out of necessity, did come out where I felt like our back is against the wall. And if you guys are in communities and countries that you really are against the wall, you have these low penetration rates, you have this not ability to afford insurance how it is today, you have all this things happening, like, innovation is going to come, because it has to. And I think that's really neat. And then I think, just like anything else, America will adopt it, right? Like, we will see those, and then we'll be behind. I know, like, there's that like Waze app, right, that I think happened over in like Israel or whatever, because they created it to basically, I think, to avoid like police or avoid, or whatever. And then next thing you know, the United States is using it just how to get to McDonald's faster, like, so
Yeah.
I think, I'm glad you guys are spurring innovation. And I think that once it comes over to America, it'll be interesting to see our version of it and how it can, adapt over here as well.
I think this is a good point to leave off this podcast. Temitope, I would like to hear from you. What are your final thoughts about the pricing issues that we have in insurance today, and how consumers actually contribute to it or not contribute to it?
Yeah, so I think what Murad just described is what is called Takafu, right? Takafu insurance is that insurance medium where a group of people, so let's say, for example, 100 of us own cars, and we pull in premiums together, and whoever gets into an accident during the course of the year, the person is paid uh, to fix the car, and whatever is left out of the pool is redistributed across members who did not get into an accident for that year. So Takafu is synonymous to what he was talking about. So right now in Nigeria, people are either opting for Takafu in terms of motor insurance because they are going to get. So the question usually is, if I pay you annual upfront premium and nothing happens to my car, are you going to refund my money? It's like the question we get all the time as salespeople, right? Are you going to refund my money? But because people don't get refunded their money if they don't get into an accident, they therefore just opt for the minimum requirement by government, which is third party. And obviously, third party is not useful to you as a vehicle owner, right? So right now, people are rather opting for Takafu or going for pay as you go. Now again, Takafu requires lump sum upfront payment, an amount people do not have. Now, that is the advantage PayU has over Takafu, because I don't need to worry my head around huge upfront payment even into a Takafu pool All I just need is a couple of 100 naira or 200 naira or 300 naira fund into my PayU wallet. I turn on my app and I'm ready to go. So my point is, sachet size products, pricing products. I mean, sachetizing products is just how we can begin to improve insurance adoption, wherein people don't get to ask us questions around. So for example, someone is required to pay $1,000 a year in a low trust environment. Is required to pay $1,000 a year for an insurance. Then someone else shows up and says, for that product you want to buy, I mean, for that product someone is asking you to pay $1,000 for, kindly just put $1. Right? Now, I want to buy a solution in a low trust industry. I will be willing to try out putting $1 rather than try out putting $1,000. Right? So sachetizing products, right, is just the future of insurance, either in the West or across Africa or in the East, right? That for me is the future. Just like AI. I mean, there's so much buzz around AI and all of that, but in this insurance industry where we all are globally, sachetizing solution wherein people have value, people have that sense or that feeling that they have spent their monies well, right? That they have that feeling that somebody has it, I mean, an insurance industry or someone or a corporate organization have not swindled them of their money, right? That for me is the future
Yeah.
of insurance from
Yeah.
where I stand.
I totally agree with you. So, interestingly enough, I just wanted to add on that. So, your concept of marketing and pay as you drive, it's fantastic, and I love it. There's no brainer. Especially you don't want to take more than what people can spend, and I love it. The good news, because of leveraging blockchain technology, transparency, efficiency, we are changing the game in Takaful. As you mentioned, we're changing the game as insurance, like Nimble is doing what you're doing. In the Takaful industry, things has been static and very difficult and very actually expensive, as you mentioned. We cannot. It's to run a Takaful itself is expensive. But because we're leveraging a very low, good technology that can make payment easy and cheaper. Okay, because the most expensive cost in the insurance industry, as we all know, issuing a contract and doing the claim. They are two very expensive costs to manage, as a team and everything. We are able to do a contract, smart contract, as a fraction of a cent or whatever, and the claim payment, even in the same manners, I would say, would be a little bit more expensive, but still very, very affordable. And then the beauty of Takadao and what we're building, we can actually build this pay-as-you-go. You can use our product to integrate a pay-as-you-go model. We have no issue. And that's the beauty of what we're doing. So I will definitely share, guys, but I'm super happy to deep dive into more into your solution because I really like it. And maybe we can definitely share how Takadao as a technology can uplift your product actually.
Thank you so much, gentlemen, for being here today. Matt, where can people find you and reach out if they want to do business with you?
The easiest way is I am the only Matt Sudica in the world. So if you want to go to LinkedIn or Facebook or anything, and you type in Matt Sudica or Matt and Nimble, very easy to find. So I have a unique name, and you can shoot me a message on there. Is probably the easiest way to go, and then my email's on there. So if you prefer that, but for those watching it who don't probably have a pen or pencil or want to write something down or whatever, just find me on social media and we'll connect and go from there.
Happy
Perfect.
to connect.
Temitope, what about you? Where can people find you?
Yeah, so LinkedIn is the only social media app that I use for now. I mean, that's quite funny, right? So if you drop me a LinkedIn DM, be rest assured that within 24 hours, I'll always I'll always respond. So yeah, LinkedIn is where to get hold of me. Yeah, thank you so much.
He's so true. I
Fantastic.
dropped him one and he got back to me in like 5 minutes.
Ah, amazing.